Nick, did you sneak in on us?
I did.
Do you believe him on this story, Nick?
I love this story. You guys are cracking me up this morning.
Were you getting your grade 3 math there too?
Yeah, yeah. My math was completely different. I learned everything in French, so I come here and people start.
Oh, French, un, deux, trois, quatre. Yeah,
Yeah,
I'm
yeah.
Canadian. I took French for 12 years. I only know how to count to five.
Oh no, that's terrible for you.
I know, I forgot it all. Those are the most useless 10 years I've taken because I didn't remember any of it. Should when you have a goldfish memory like me, you can't teach me stuff like other languages.
I took 4 years, and that allowed me not to take it in Michigan. And thank God that I didn't have to take it in Michigan. The 4 years in high school, I'll thank my sister for telling me to do that. I didn't even have to take the admissions test for that. So, but Nick, we digressed here. We got to talk about stocks here. And
Well,
you sent me a very interesting email last night, and I figured you'd want to talk about that a little bit. What about this move in Walmart?
oh, Walmart. Let me start by something else. Can I digress and start by something more important you guys just talked about?
Sure,
Yep.
go ahead.
Which is, we'll get back to Walmart, which is, you said we're not moving off of these numbers on the PPI, for example.
Yep.
And that is exactly what I've been saying for a long time. We're not trading fundamentals. We're jumping from headline to headline, and that's why we don't move on the fundamentals. They come out and they don't mean anything because we're just waiting for the second headline to hit. And the last headline was Abe not wanting to, put in effect the second tax hike, and that's why the market jumped up 2% in Japan. So we're moving from headline to headline. Fundamentals be darned. That's why we're not moving on these numbers much.
Why do you think that is that nobody follows the fundamentals anymore? Is it just like this
Because
whole? Go
because
ahead.
headlines trump all. You can have all the best fundamentals, and then you get a disaster headline, just to illustrate the ridiculous point. But you get a disaster headline, and what do fundamentals mean at that point? Nothing. The market is going to react to the disaster headline that comes out. Conversely, if you have out of nowhere QE trillion from Japan a few days ago, boom, everybody starts buying regardless of fundamentals. So when headlines hit, all fundamentals, all open interest data, all research, all homework, be darned, the idiot and the genius are at equal footing. So homework out the window. It's all about the headline, and
Is
that's why
that
we.
be, is that because there's too many news algorithms out there? You got all the high frequency news algorithms that respond in milliseconds to every news headline there, and they move the prices immediately. I know I had a couple traders on the floor I was talking to. They were saying, it used to take, when a stock reported earnings, it would take a minute or two for it to digest, and everybody's looking through it, and then it would try to find its home. Now you just see this immediate spike up, on the earnings, and it seems like it's spikes and then it sits there.
It's probably the byproduct of technology. I mean, the faster trading gets, even for us, even for the smaller person, the retail, anybody can just sell and buy in an instant. You get shortcut buttons on your platform. You get, loaded orders. All you have to do is send all or, delete all. It's just easy. And you have access to all the news. I mean, we get the news through Twitter before the news agencies probably print them. So it's a lot faster world, and reaction to the headline is normal. But trading long term on headlines is not normal, which we've been doing. We just go from headline to headline, and it's probably the fact that all the feds across the world, I call them feds, all the government that control money, have their fingers in it. If they did not have their fingers in it, then we would be trading more fundamentals than headlines because there'd be fewer headlines.
So everything's just manipulated.
Let's call it well organized.
Okay, we won't use the big M word here on the show.
No, it's well
Nasty word.
organized. It's well organized. But this will end. Or will drop a little bit. Like the U.S., we no longer have QE, so that part of it is gone. The next step is the raising rates, and you'd think that the headline like the PPI would influence that, given that there are prices in there. But it should have more than a point move, like you guys were saying, but it didn't. That's because we're waiting for the second headline. All
Okay,
right.
I got to get your thoughts here on Alibaba, Nick, because I took a trading position on it here. Swing trade, small trading position. I'm looking at it to hold the whole 112, 113 area. It's a big number there. Looking at it at 114.49 here in the pre-market. I didn't check the imbalances yet. It seems to be a buy imbalance on this thing every day. There's a small one, 51,000 shares. What are your thoughts here on Alibaba?
Long term, I think I shared that with you last
Yeah.
time. I think it's unless they are lying, the math work is on its side long term. Any dip will be bought, and I've been telling people, watch out for the 13Fs. Don't get into hot names because those are the guys that move a lot on somebody coming out
Right.
like Icon saying I bought whatever, I sold whatever. So everybody, the clear winner is Alibaba. Everybody wanted Alibaba. So even though it's weeks back. I still think every time Alibaba drops considerably, they're going to come in and buy it. So if somebody sells puts, they can always roll out and get out of trouble because it's going to bounce, unless the whole market corrects and then everybody loses. So, but long term, I think Alibaba has footing. So every dip will be bought, in my opinion. If they're buying GoPro dips overnight, this one will be bought. So long term, the best trade on Alibaba is really an investment style. If you want to trade it, I would do credit put spreads every week and call it a win, or once a month in bigger size, so you don't have to worry about the weekly gyrations in it.
Where would you be comfortable writing? What level?
I wrote at 108, 110s. It all depends the portfolio. If you're short in your portfolio, which I am, I'm aggressive. So I don't care. I just want the premium because I know time is on my side. It's comfortable right now. If I look at the options market for this week, it looks like it's got a lid on around 114, which is around where it's hovering right now. But I don't think it's that big of a lid. So they look like they want to range it between 113.5 and 115. So I'm comfortable writing outside of that. On the downside, I'm not comfortable doing credit call spreads. Obviously, I do not want to short this name.
Just alluding to your point, Nick. Third Point's Dan Loeb, Appaloosa's David Tepper, and Omega's Leon Cooperman requested personal meetings with Alibaba executives in September. It wasn't just showmanship hedge funds overwhelmingly taking stakes or some cases. They're just talking about getting in. So there you go. Some of the big boys, and obviously the performance speaks for themselves. We always
When's
go ahead,
I
Dennis.
was going to ask Brent if he can hunt down. When's the next 13Fs due there? They usually all come out at the same
Quarterly.
time. Yeah, but what's the date? Do we have a date?
Yeah, so looking like probably the second week in February. I'm estimating like February 13th, 14th, 15th, something like that.
Okay,
Let me
so
look
yeah,
at the
so we
calendar
just-
real quick.
So we don't have any coming up here,
We
right?
just had some.
No. Yeah, we just had
them
some
when I was away.
when you
Yeah,
were away.
the big ones came out already. The big ones came out.
That's what I missed it because I was away. So you can't take 2 days off, then you miss the 13Fs. It's not good news.
Well, it could be good news if if it stops you from trading against them, right? Okay, so you guys talked about Walmart, right?
Yep.
You want
I
you want to get back to Walmart?
Please,
Yes.
I love your comments. Go ahead.
Yeah. What did I say in it? I think it thinks it's a Momo or something like that. It's trading like a GoPro. So I looked at Walmart. Somebody asked me about Walmart. I usually don't look at it, and I was like, "Whoa, what is going on?" So I do go to Walmart, and the Walmart close to my house is a pretty nice one usually. And last year it just went downhill. I mean, they were short staffed. The shelves were half empty, and
Really?
I think, oh yeah, it was terrible. And
Where do you
sale-
live?
in Southern California. Let's just leave it at that.
You don't want
Don't
to
worry, I
take
won't
it.
come and hunt you down.
No, you're welcome to come. So last year there was a market a drop in service in stuff. If I wanted to buy things, they weren't on the shelves, like little drink mixes and things like that. And it was very surprising. And it hasn't gotten a lot better. It has, shelves are stocked now, but still they haven't stepped it back. So I'm not sure what this performance is all about. Is it engineering, the financial engineering term that I kind of made up the other day? Are they cutting costs in order to make the bottom line? I'm not sure where they got these performances, but you know, I would short this, and I'm looking to get some puts in this. Puts in lotto style. I'm not going to short it via selling calls or anything like that. Just because if I zoom out to a 2-year chart daily, and I want to connect those two little peaks that it had, they line up nicely with this peak coming up here. So I'm just trading the momentum, and it looks choppy over 2 years. It runs up a lot, and then it gives it right back. So I'm just going to take a long short shot on it. And however, I want to do a caveat and transition into a few other names you guys mentioned. about retailers, low gas is no doubt a good thing for retailers over the holidays because we will find ourselves with more money in our pockets as U.S. citizens here because gas is lower,
Mm.
and we are going to spend more because we love shopping. And the, all these retailers that are getting hammered now, if they lower guidance, they might be worth a lotto long shot going into the holidays after they settle a little bit because they might get the benefit of those extra dollars, including GoPro, which I hate to go long, but I also see that they were down 1% last night and they're up almost 1% now, so that's pretty incredible.
Well,
Nick,
this is a good segue here because TJX, while you were talking, just while we just brought you on, 10 minutes ago, just reported earnings, 85 cents versus 85 cents. Comps up 2%, expecting Q4 EPS 86 to 90. They are lowering 2015 EPS guidance down to 310 to 318. So here you have an example right now here, Nick, a live example. TJX is trading down here. And believe it or not, this thing was really trading a lot lower here just 10 minutes ago. It's already bounced back and got back over half of the losses here. This thing was under $60. It's now back up already at 60.70. Still trading red though on the day.
Yeah, and also it's a rising wedge recently in the past few months. So those can be bearish, especially if it's close to highs. I mean, 65 is probably a 2-year high that I see, if not an all-time high, and it's breaking that wedge down. So we'll see what it does today. I see it's still down 1%. So I won't go along it now. I'll give it time to breathe a little bit, especially if that wedge wants to come to fruition, broken. And but if they're lowering guidance, might be worth a shot after it drops a little bit. TJX is pretty high right here. So
do you just going back to the Walmart trade? How long are you going out on that? Are you looking for like a quick drop, or are you giving
well,
yourself a little bit of time?
Well, there are a couple ways one can do a lotto. You can either uh, pay up a little bit and buy close to the money and go out in time to give yourself time to be right, and then you would only have to guess direction and not magnitude of move. Or you can go real cheap, real short in time, and go, pay a few pennies in the hopes of a big move. A lower chance of success, but lower cost, and you can repeat. So it all depends. I like the ones that give me time and would have some asset left in it after a day or two of movement. So I'm not shy of taking like maybe a December put position on it. Maybe even a broken wing of sort. Some people like to do put flies. I don't like to do butterflies because it's like threading the needle, so hard to make it right. Maybe a put calendar might work if there's enough premium to make it worth it, or just straight out puts out in time, and you can always sell them if you think you're wrong. It's not going to leap up to 3-4% a day like Apple did this week.
Okay,
What do you,
do we want to go to Apple here? A segue here.
How's this for segue? Huh?
you're
Yeah.
good. You can just interview yourself here, Nick, today. We don't have to.
Well, here's the thing. You remember when it was 700 the first time around, Apple, and somebody came out and said 1111 was my price target. Well, another 7 weeks, like last week, we'll be right there. So 5% in a week on Apple, it was really surprising for me. I did not see that coming, although I did see to not short it. I said something is going on. I don't know what. I'm out until I figure it out. Meanwhile, definitely do not. I'm not shorting this name. Incredible movement. Yesterday was the only blink I saw in a while. So yesterday the markets wanted to rally into the close, which we've been doing. They've been fighting for a green tick at the close for the SPY and the SPX, and they've been getting it almost every time. And yesterday the markets wanted to do that, and Apple was not participating in it. That was a little surprising. So I'm interested in seeing how it trades today. I'm still seeing that it's showing an erroneous tick here at 117.50 on one of my charts.
That
So
was a bad tick yesterday, wasn't
yeah,
it? I
yeah,
just put it on mine too, 117, yeah, 28. I think that was a
right.
bad tick.
Yeah, I think so too. So I just want to caution people not to use it in their, analysis. So it's still in resistance territory based on open interest. It's the traders are still hoping it be at around the 110. I think it's a tall order to get to 110, but there are still positions in there that need to roll out this week. The second roof on it is 115, but doesn't mean anything anymore because last week it traded the whole week inside very heavy resistance based on open interest, and that's why I wasn't shorting it because I couldn't explain it away. So I'm still not trading it. It's too high for me to go long it convincingly like Alibaba. I'd rather put my long money in Alibaba and maybe Google now if markets settle down because Google got hammered. Technical traders are looking for higher prices in Google in order to negate the possibility of revisiting the 500 level. If it gets anywhere near 500, I'll go along it in a big way because I think it's worth it. So Apple, I'm staying away from it just because I can't explain the price action.
Okay, I just want to ask you here about the market, and I like to follow closes and consolidations and whatever, and I'll just read you off the last six closes in the S and P's: 2,034, 3650, 36 even, 34, 38, and then yesterday we had the all-time high of 39.75. 4 or 5 closes, 6 closes within the same area, holding that as support here. Do you think we're just developing just another consolidation launch pad to go higher here, or how would you play it?
I hope not, just because it's based on what? I mean, I understand consolidation is somewhat bullish, especially but with the volume levels that they are. But based on what? What got better that we need another level up? Nothing got better. We lost QE like we were going to lose it. We're still going to get higher rates, so we just don't know when. And Yellen is completely reactive. She does not know when. She's just reacting to the data. And if the data spikes one day, we're going to have a conniption. We still have the geopolitical risks. Europe is still admired. Japan is back in recession. So what got better for us to rally higher from here? I trade ranges, and we are at the upper end of the range. And my assumption still goes that there will be room upwards, but there also would be some downdrafts a little bit. So I'm just trading the ranges. So at this point, let me ask you this: if you look at that chart you just mentioned, if you had a big pile of money and you're not invested in the market, are you more likely to get in at 2030 long, or are you more likely to put in some shorts first? I would be more inclined to put in shorts rather than longs first, and maybe put some longs to hedge the shorts. But if I just look at the chart, I'm looking at something that is at the upper end of the range. So yes, it could be breathing in order to leap up, but doesn't it need fundamentals to leap up or a headline? So maybe if we get the surprise ECB announcement that they indeed are going to be expanding their balance sheet, maybe. So I think we will either need a headline or a change in fundamentals to run up. Otherwise, we are going to meander.
Okay, and anything? I mean, Ace was just asking me here about just like your kind of approach. You're not. I mean, how often do you do day trades, and just what are you looking for off the open? Are you more to maybe take off some positions that you had previously? Do you like to initiate a lot of trades in the first 10, 15 minutes, or do you like things
I,
just to sell? Just a little bit of your style.
I trade daily. I'm not a day trader. I do trade my thesis. So everything I do is based on the thesis. Unless it's a lotto trade, then it's just a quick lotto, small cost with a small payout or a decent payout expected. Although my lottos have been terrible the last couple of weeks, but before that I was in a good jag. But those are for fun. As far as trading, I trade my thesis. So I put on big macro trades and then I adjust accordingly. So yesterday the market opened. I didn't trade the open because I know it's going to be full of junk. And then when the market started, behaving almost normal price action, I went long the SPX by selling a credit put spread in the 2010 area, just because I do have a lot of short positions, and doing long on the weekly basis allows me to withstand a little more heat on the upside. So that's what I do. And I close winners. For example, I had a position that was short the Nasdaq at 43.30 for 43.40, and I need to close that because it's just pennies and the risk is $10 wide. Why keep it on? And it expires in a few days, but I like to close them. I don't like to sleep on them and hope that they expire worthless. Saving $100 is not worth it to keep on
The risk.
thousands of
Okay.
dollars. So that's what I do. I trade my book. I don't troll the charts for trades. If I do and I find Walmart, I just do a small put position. It's not a big investment trade. It's just a trade for a lotto style trade where the small dollars with a decent payout.
Oh,
I did short Tesla the other day, and now it's a free short. I did an iron condor that survived and they gave me money. And with that money, I collected money, premium, and it expired worthless. So I closed it early for pennies. So with that money I collected, I took a bearish position in Tesla long term for December. And that is all gravy now. All I have to do is wait to see if I'm right or wrong. Halfway through, if I'm right, I'll keep it on. If I'm wrong, I'll peel it off, and whatever I collect, the residual is all green for me. So that's what
playing
I
with
do.
the house's money. We got Nic Chahine, MarketFi maven and author of Create Income with Option Spreads. He joins us every Tuesday at 8:35 and gives us a colorful and definitely educated viewpoint on the markets. Nick, thanks for coming on, and we'll speak to you next week.
Awesome show, guys. Thank you.
Okay,
Thanks, Nick.